All right, let's dive into this wild story of how a company known for making comfy wool shoes suddenly decided it was going to be an AI powerhouse. It's a tale that's got everything: market craziness, some pretty slick financial moves, and a pattern that honestly has been trapping investors for decades.
This quote from an analyst just nails it, right? It perfectly sets up the battle. On one side, you have this incredibly powerful, super seductive story about an AI future. And on the other side, you've got the professional investors who've, seen this movie before and are betting big that it's going to end badly. It's the ultimate showdown: narrative versus numbers, pure hype versus cold, hard history. And wow, what a story it was. I mean, just look at this. The pivot was, at first glance, a massive success. The second that news dropped, the company's stock, ticker symbol BIRD, it just exploded. We are talking a 700% surge on the announcement alone. That's a staggering number that gets headlines, creates a ton of FOMO, and just pulls in a flood of new buyers.
But here's the thing: that 700% jump, it really doesn't tell you the whole story. To get what's actually going on here, we have to rewind the tape a little and look at the company Allbirds used to be, right before this incredible transformation.
That's how far the company's valuation had crashed: 99%. Just let that sink in for a second. From a peak of $4 billion, Allbirds had completely collapsed. The brand, the inventory, their entire shoe business, it all got sold off for just $39 million. So this wasn't some pivot from a position of strength. This was a Hail Mary from the absolute brink of extinction.
So, facing a total wipeout, what did management do? They made a completely radical move. They went out and secured $50 million in debt. Not to design a better sneaker, no. It was to buy GPUs, graphics processing units, and completely rebrand as an AI cloud provider called New Bird AI. So this brings us to not the million-dollar question. It's more like the trillion-dollar question. What does it actually take to compete in the high-stakes game of AI infrastructure? I mean, 50 million might sound like a lot of money, but as you're about to see, in this world, it's barely a rounding error.
Just get a load of this number. This isn't the total market size. This is just the forecasted AI spending for 5 companies in 2026. We're talking Amazon, Microsoft, Google, Meta, and Apple. $725 billion. These guys aren't just playing in the AI revolution. They are building the entire foundation with literal mountains of cash.
And it's not just the names you know. This is the projected spend for a company called CoreWeave. They're a specialized AI cloud provider. You might not have even heard of them, but they're planning to spend up to $35 billion in a single year just to stay in the game.
And this number, this one is just mind-bending. This is the estimated global investment needed for data centers by 2030 just to meet AI demand. We are not playing a game of millions or even billions anymore. This is a game of trillions.
So when you see those massive trillion-dollar numbers, the Allbirds move starts to seem less like a serious business strategy and a lot more like a desperate magic trick. And you know what? This trick has a name. It's a classic financial playbook called corporate alchemy. At its heart, corporate alchemy is all about changing the story to change the stock price. You take a dying business that the market thinks is worthless and you bolt it onto the hottest trend you can find, right now that's AI, and you just hope that the magic of that new story will rub off on the company's valuation. And the financial logic here is brutally simple. A boring retail company, like a shoe brand, the market might value it at, say, 10 times its annual earnings. But an AI company? Oh, that's the future. Investors get so excited they're willing to pay 50 times earnings, maybe even more. This whole pivot is just an attempt to jump that massive gap.
And believe me, we have seen this exact playbook in every single market bubble. Back in the dot-com boom, companies would just add .com to their name and watch their stocks go nuts. Then, in 2017 with crypto, a struggling beverage company, Long Island Iced Tea, renamed itself Long Blockchain Corp, and its stock tripled overnight. And here we are again with Allbirds becoming New Bird AI. Same script, different buzzword.
And this right here just perfectly shows you how disconnected from reality things can get. Check out this comparison from 1999. You've got Brown Shoe Company, a real profitable business with over $1 billion in revenue, worth about $261 million. Then you've got Red Hat, a tech company with tiny revenues and losing money, and it was valued at over $21 billion. That's 80 times more. The market wasn't valuing the business, it was valuing the story.
So let's bring it all back to Allbirds. This is their total investment, $50 million.
When you put that number next to the $725 billion from the tech giants or the $6.7 trillion needed for global infrastructure, it's not even a rounding error. It's a speck of dust. It is completely financially insignificant in the real AI landscape. So you have to ask, why on earth does a pivot with such a tiny investment cause a 700% stock surge? Well, the answer has very little to do with finance and everything to do with investor psychology and really a whole new force in the market.
Welcome to the age of what we can call meme fundamentalism. In this world, a company's actual financial health, its profits, its competitive edge, all that boring stuff, it just doesn't matter as much as the story, the meme, the hype, the excitement you see on social media. That becomes the real reason the stock price moves.
Now, what's so powerful about this is its brutal, painful honesty. For the original investors, for the management, for the people who held the debt in a failing company like Allbirds, this AI pivot isn't really about building a new business. It's about creating one last spike in the stock price so they can sell their shares and get out. And who are they selling to? Well, they're selling to the retail investors who are chasing the hype. You become their exit.
And this is the modern engine that makes the whole thing go. You've got financial influencers or finfluencers all over social media amplifying the story. They make videos, they make posts about the next big thing, and that drives a huge wave of buying from their followers. That buying pressure is exactly the liquidity that the insiders need to sell their positions and walk away with a massive profit.
And while all the retail investors are piling in, what are the pros doing? This number tells you everything you need to know. Over 18% of Allbirds public stock is being shorted. That means institutional investors are making enormous bets that this pivot is going to fail and that the stock is going to go right back down. It is a classic standoff between the meme and the math.
So, after hearing all this, how can you spot these desperation pivots out in the wild and, more importantly, protect yourself from becoming someone else's exit liquidity? Well, there are a few key things you can look for. First, always look at that capital mismatch, just like we did. Is their investment just a drop in the ocean? Second, scrutinize the management team. Ask yourself, do the people who ran a shoe company into the ground suddenly have the skills to run an AI company? Third, and this is so important, do your own homework. Read the company's official SEC filings, especially the risk factors part, where they legally have to tell you everything that can go wrong. And fourth, check that short interest. If the pros are betting against it in huge numbers, that's a massive red flag. And this is the ultimate smoking gun, and it's found buried deep in the company's own legal filings. This is not my opinion, it's their own words. Allbirds has an official backup plan to liquidate. That's a fancy word for shut down the entire company and sell off the pieces if this AI dream doesn't work out within a year. They literally built their own eject button.
You know, the whole saga of Allbirds turning from wool shoes to AI clouds really forces us to ask this super fundamental question. Is value based on profits and cash flow, or has it just become a game of storytelling where the most convincing narrative wins, at least for a little while? This case is a perfect illustration of that divide, and it really leaves it up to you to decide where that line between a visionary pivot and a desperate final gamble truly lies.